we're still going short. We're just updating so that we get in at the right levels. Very important, of course, for us to get in at the right levels. Again, I cannot update unless I have a momentum plot, unless I can decipher the waves on the momentum. I cannot do something before the fact. So there is really an internal 1-2 right here. There's a higher degree 1-2, internal 1-2. There is a 3. There would appear to be an internal 4 or 5. This is internal degree 4. This is a 5. I only can confirm that this is internal. This is a degree 3. This is a degree 5. Definitely, there's divergence. This is all rounds up into wave 3, 5 into 3. The same thing happened here. That was, of course, strong 3, and then 5 rounds up into internal wave 3 into 3. Now I know that wave 3 is finished, and I know that there's going to be a correction into wave 4, and that correction will only take me, because of the momentum plot on the 1 hour in particular, unless that improves, will only take me to that green dashed line. Okay, so I can even project what kind of correction is going to happen. So we don't even need that arrow. Okay, so this is going to be a 4. That is the 4 you're looking at. There's of course an A, B, and a C, and then we get that wave 5 that we have on our analysis. We were hoping it's going to go to 152.7. Unless there is stronger risk aversion, it will not go to 152.7. Okay, so there's also another possibility that the correction could be over. Now, the correction could be over only if we begin to have positive momentum on the 1 hour. We're not having that yet. We're actually having an extension. Don't get fooled. We don't want to get fooled. What we're seeing on the 1 hour, on the 15 minutes, remember what we had just been doing. We said this is a wave 3 because there's a 3 and a 5 round up the cycles. This is a wave 3, all right, and that is another 3 and 5. So all of this is wave 3. Maybe there's a 5. That 5 could be contained on above oversold and just at oversold levels and still be doing a wave 5. So long as you have this continuous negative plot on momentum, it means you can have an extension into 3. And therefore this 4 should be treated as a short. We're having, of course, a very complex head and shoulder that could develop into double heads and shoulder. So we use the opportunity to sell below level 1, so long as we're having negative momentum. We are not concerned that if the market reverses, someone may consider that, well, this is going to be moving suddenly into overbought. We have an internal degree 1-2 and the market takes off on the other side and we're caught on the wrong side of the market. Yes, it is possible, but if we have that, and we are shorting at the right level, key to short at the right level, below level 1. Key to short at these 2 red arrows, because if you're shorting at that right level, this neckline will save you from any harm. The market takes off, bumps into this neckline, drops back, you go out. This is of course inverted head. You're having shoulders to the left, you're having shoulder to the right. You're okay, you go out at entry. And you have not missed the trade opportunity. Because we are momentum traders, at least myself, so we are on the right side of the direction. The right side of the direction, momentum is down. We have to sell the top of the cycle. The top of the cycle is below that level 1. Already topped here, fell, will top maybe lower, break lower. Okay, so short term, the current entries are really valid. We're seeing a head and a shoulder. Now we're going to wave 5, we think, and this is going to have these projections. So we're projecting from 2 to 3 will take you to target levels 154.7, 138.2, and next target level is going to be 154.3. There is also possibility just to touch or crash into these 153.6, maybe not, depends. So we will not be too optimistic. We just want to short 50% here. That is for C, 156.5. All right, 156.5, possibility even 156.7. We just have a stop, of course, mental stop at this area here, 157.2, 157.3. A mental stop would also mean I could go out half size. If I'm holding strong size or I'm not comfortable, close out half size because I know that the cycle level has been invalidated. I would rather personally wait for a rejection and decline and then go out at entry as already explained. Okay, so shorting sterling dollar, sterling yen, 156.7, 156.5. Stop is gonna be 157.3. We're targeting 154.7. This is almost 200 points away. You could even go to 154.3. It would be a bit more than 200 points away. We're moving inside of this ending diagonal. Once we get positive momentum on the 1 hour, at least degree 1 and degree 3 on 15, and we're at any of these levels. The best buy opportunity is 151.2, but I doubt we're ever gonna get there from what we are seeing, but it is of course possible. Buying at that level, 152 plus, 152.70s, takes you to, of course, 161.2, 164, assuming that sterling is going to become a positive yield vehicle. And we are looking at these levels here of entry. The most appropriate is 4C here, right shoulder at 152.7. We could consider that we'd have a limit entry long for half size at 152.7 at that point. It's on top of a level A. There's 1, 2. If this is going to develop, it's going to be a 1, 2, 3, 4, bounce into 5, takes you to 160.15.